Good morning, everybody. It is Thursday, June 20th. I'm Jane Johnston with the Briar Hill Group. Welcome to the Victoria Real Estate Show with...
Hey everybody, Andrew Plank here with the Vibe Real Estate Group and Royal LePage. And...
Jen Lowe, mortgage broker with the DLC Modern Mortgage Group.
Hello. How's it going, everybody?
Good morning.
Yeah.
How's real estate world? Go ahead.
I got a story. Sorry. I couldn't find my phone this morning. And so I've got on my watch, I've got the Find My Phone app. I've been moving some things around and I thought maybe I'd thrown it on the bed or it was in my closet, like in my cupboard or whatever. Turn on the Find My Phone app and I start like, oh, it's behind me. So I look in the closet and I'm like, no, it's not there. It sounds like it's over there. So I start going over to the other side of the room. It's like, now it sounds like it's, the minute I'm looking at the other side of the room, it feels like it's over there behind me over there. I keep like going back and forth all over the room, looking all over the place. Finally realize it's in my back pocket. I'm chasing this thing. It was driving me nuts. Where is my phone? It's over there. I can hear it behind me. I go over there and then it's behind me over there. What's going on? I spent like 4 minutes looking for my phone.
And it was on you.
It was in my back pocket. I usually do a little pat down, like, where's my phone? I didn't think that it would be in my
It's
back
like,
pocket.
where are my glasses?
Exactly.
Yes.
Exactly. Okay, sorry. I had to get that off my chest and just admit to the whole public world that I'm an idiot.
That's so funny.
We can get on with the day now.
The Find My Phone app really does work.
It really does. It really does. It was going off and off. I'm like, okay, where are you, phone?
Okay, here's the funny thing, though, is that we are able to chat before the show starts.
And I waited to tell you now.
Yes.
Yeah.
That's hilarious. Well, it's not like we all haven't done stuff like that, honestly.
No.
Let's be real.
I mean, I'm sure we could tell stories about keys at listings as well. Like,
oh my God.
You left the place after the showing and taken the key home with you and then gone, oh my God, I gotta go return this key. Yeah.
One time I was showing a place and it had a big grate. This was on a Gorge Avenue, Gorge Road, and the key fell down into the grate and it was full of spider webs. And I was like, oh my God. Anyway, so I went to my car and I got a plastic bag, put my hand in the plastic bag, went down and grabbed it. I thought
you're lucky. At least you could get through that. I've dropped a key through a slot in it was like a fence that was only like at ground level. So not a fence, a deck at ground level with wooden deck with just little spaces between all the boards. Anyway, because you take it out of the lockbox is right above on whatever it's hanging on. You take it out and then you fumble a little bit and then it's gone. And you're like, oh no. Good times. Yeah. Okay,
so let's do I've just been looking at the statistics, so let's get into this.
Okay.
Woohoo! All right, so today is Thursday, June 20th. We're going to be talking about renewing your mortgage and whether or not to go fixed or variable. I'm one of the people who renewed just before COVID started at the end of 2019, so I'm coming up on my 5 years. So I'm a little.
Mm-hmm.
We'll see. It actually sort of brings to a point, like, don't put all your eggs in one basket, right? Because now people are, if you take out a line of credit and then you borrow that and then you buy another place or whatever, you can have everything coming to fruition at the same time, right? Coming to term at the same time.
Just like you want to do with your investments, right? You want to diversify. Same thing with mortgages, for sure.
Yeah. Mm-hmm. Okay. So if you like the show, guys, please tell us that you like it. Subscribe to us. And please comment. We'd love to hear what you have to say. Don't forget, if you know somebody who wants this information, please share it as well. Okay, Andrew, go ahead, buddy.
Oh yeah, so today, June 20th, and we had 400 new listings go on live in the last week. 178 properties pending, so this is a little half. 188 price decreases, again, seems to be, pretty similar to pendings, and price decreases are running in parallel. 2 price increases for properties back on market, 220 sold, 45 only expired. So again, despite the longer time on market that we're seeing and the larger number of price decreases, eventually it looks like things are selling. 7 properties withdrawn. Compared to last week, 378 versus the 400 this week for new listings, 169 versus 178 for the pendings, 165 price decreases versus 188. Overall, it's pretty close. I mean, everything's within striking distance. Maybe a little more price decreases this last week than the week before. What are you guys seeing here?
Well, we went from 48% list to sale ratio there to 44.5. So it does feel like it's slowing down. And I was looking at the stats. I think I'm feeling it that it feels like it's slowing down.
Interesting, because I've got more dust. Like, my buyers seem to be, they have closings coming up, so they've got some feeling of urgency anyway, but I feel like things are wrapping up. Because we've sold their homes, so now they're looking to buy. But when I'm making showing requests, and this is on condos, the condo market has not been hot lately, and the stats for showing condos not that great. Half of the condos I'm trying to see are under contract, at least. In the price point of between 600,000 to 800,000. So
I've got one coming up. We're just waiting till the end of August or mid-August to put it on. I figure it'll just get more active.
If we see another interest rate decline, perhaps.
Yeah. And also just like terms of the school year, it's just a better time, I think.
Right.
Anyway.
Yeah.
Okay.
Right now is that end of school year craziness.
Yeah.
Yeah.
Okay.
People are
so
distracted.
Moving from June 10th.
Where did that come from?
174 unconditional sales compared to 340 this week. So we're seeing lots of activity there. New listings were at 863 overall, and compared to 1,297 for June of 2023. So we're up over last week from 458 to 863. That's as of Monday. Total active listings at 3,416, and that is up over June 2023 at 2,342. So everything is up. Sales are, I don't think we're going to reach it where we were at last year. Probably not. I don't know. Looks like it's slowing down.
Okay. All right. Is that your dog with a toy?
Yes.
What is it? Okay.
She's compiling all her toys in a pile right now.
Okay, nice. All right, just as long as we all know.
Yes, it's a squeaky toy. Yeah. Sorry about that.
All right. So it's okay. BCREA, these what they're saying essentially is that last year we had a surge in home sales in spring. This year we're not seeing that, and we have returned to more of a balanced market. So when I'm saying slow, it's more balanced, I guess. List to sale ratio. That's
sure,
good.
Fair enough. Yep.
I guess for you guys, the market is slower when it's balanced, as opposed to it's like it busier on the seller side or busier on the buyer side, in a buyer's market or a seller's market. Is that?
Well, in a buyer's market, we actually can be slower, but also carrying a lot of listings, and that can create a lot of It can mean that we're busy giving updates to our listing clients. We hold a lot more inventory than we normally would, so we're busier in that sense, but things are slow and our buyers are not that urgent. So a buyer's market tends to be a lot more running around for a lot less income. Whereas a seller's market, you list a property, it sells fast. You could be working with buyers for a long time, so you can be very busy for that. But you're not necessarily carrying that inventory. Whereas, and then a balanced market it's just a good in between where everybody's happy. Jane?
It means when you're going to show properties that you actually have choice and you don't, as a buyer, you don't feel a lot of pressure. And that's in a balanced market. And in a buyer's market, I remember when I first got into real estate, I showed somebody 27 properties one day. They had one day to look at homes, and I think there were maybe 30 to see, and I showed them 27. So right now,
did your brain explode? I mean, how 27 properties in one day? How do you actually evaluate between those properties and really make a decision?
It was a very emotional day anyway for this woman. She had to get out of a relationship, so we had to do it. Right. And there's always a story, right? And I said to her, we started with a stack of paper, and I said, anytime that it's a no, you just take it out of the stack. And so we whittled it down to 3, and then we looked at location and lifestyle, and then she picked one and we offered on it. And so then on a buyer's market, you have a little more choice, right? So you also have time, and so there's less pressure.
Right. Because if you'd been looking in a seller's market at that time, you would have been you might have been able to see 3 properties that would have matched your needs, and you would have maybe competed on one, written on one and competed against 3 to 5 other people. And then there's a chance that she didn't find that, and then you continue to look or buy something that's just not as nice.
Yeah. The other thing is when you're working with a buyer in a balanced market and they're taking their time, is that sometimes their criteria change over time as they save money or the pricing changes. And then every once in a while, like I have clients who bought on a place that it's kind of the crappy house on a nice street. And all of a sudden it's like, bing, you have to move fast. So anyway, okay, let's get back to the stats. All right, so just looking around the province, Victoria average price is up 0.7% at 1,026,217, and these are from the BCREA. Unit sales are
Association.
Yeah. In May, 740 units sold, and we're down 1.1%, which is negligible. And on Vancouver Island, what was interesting is they were up in the northern part of the island, 755,148. That's up 3.2%, but they were down in unit sales of 7.7. This jives with friends of mine who are up there. Anyway, okay. So, Jen,
hello.
Tell us what you got here.
Yeah, so right now, lots of clients, their mortgages are coming up for renewal, and it's the biggest, really hard to decide whether you want to go fixed or variable. In the current market, what we're dealing with right now is we've got a variable rate that is projected to come down and has started coming down, but it is currently sitting just over 1% higher than what you can get for a 5-year fixed. Mm-hmm. So the question is how long is it going to take to come down, and does it make sense to go fixed or variable? So when we look at, and actually a couple slides past that one, I believe is sort of the next one. There we go. So when we consider, and I know it's kind of hard to see these numbers, but the gist of it is based on a mortgage amount of $450,000, which is kind of the average. If we were to take a 5-year fixed rate today of 4.89, is that better or worse than going with a variable? And this calculator that I can use will tell us. So if we think that rates are going to come down in this scenario, rates are going to come down over the course of the 5 years, just over 2%. So you can plot into this calculator, okay, I think the rates are going to come down. I mean, you could put in July that they're going to come down a 0.25 percentage point, and then you could drop them again. Whatever you think over the course. And then it will tell us based on the summary screen, which is just two back.
Slide back. Yeah, two back.
Hold on.
That one.
Nope. Well, this one shows at what point you meet up and what point the payment is going to be the same. And the next screen, which is the summary, which shows, okay, over your 5-year period, assuming you were to get a 5-year fixed right now, it would actually save you $1,358 over the term, assuming an interest rate decrease, like versus on the variable rate side, an interest rate decrease of 2% over that same time period.
So what's the fixed rate right now? It's 4.89.
4.89. So that is now there's other pieces to explore, whether fixed or variable is better. Are you planning on selling the property? Because the other thing we are seeing that's really important is the interest rate differential, or the posted rates for the banks are decreasing. And so when they do that, that means that the interest rate differential penalty increases. So, and that's something. Oh, sorry.
If you sell, you have a big penalty.
Yes. And you don't really know that until you get to your lawyers, and unless you've got a people mortgage broker that's looking at the calculations and seeing what that's looking like, that can be a pretty not so pleasant surprise.
A lot of people are surprised by that, and it's one of those things that, like, when we talk to somebody about listing a home, we always ask, "What's your mortgage situation?" And if you talked to the bank about what will cost you if you just sell and if you sell and have to pay off your mortgage, because these differentials are huge. So, folks, what the bank's looking at, and Jen, maybe you can explain this, but the bank is going to make more profit over time at a higher interest rate, and as interest rates go down, they have to resell that money. So you want to explain the rationale for that interest rate differential?
Yeah. So basically that's exactly it. And what they quietly do is they decrease their posted rates, which then increases the penalty, because the interest rate differential penalty is the calculation from their posted rates versus the discount you received off of your original rate versus what they can sell that money at now, comes up with your penalty. And it's impossible to know what that's going to be when you get your mortgage. So that's the important, if there's a chance that you're going to want to sell your property prior to the end of your 5-year fixed term, it's important to consider a variable rate mortgage. As penalty for a variable rate mortgage is a 3-month interest penalty.
Only. Yeah.
Only. Yeah.
Okay, so the blue line or purple line at the top here is explain these lines to me.
So this is showing what the fixed payment is versus what the variable rate payment is. So as you start out, your fixed payment would be $25.8912. Versus the variable rate would be, and we're missing part of the slide here that shows the different colors, but the variable rate would be, payment would be $28.79.
Which color's which?
I don't know, honestly, off of let's just see here. 25 versus 2,500 versus the 28.79. So monthly payment amount, fixed monthly principal and interest.
Okay, why don't we look at this?
Yeah,
So
this one is better. The other one is hard to understand. This one is just showing you, so over the course of the 5-year term, assuming, you know, whatever we plot in for potential rate decreases or increases, what your net savings would be. And so in this scenario, if we're assuming that variable rates are going to drop 2% over the 5-year period, you would still be better off going with a 5-year fixed rate, as it would give you a net savings amount of $1,358.
Unless you were going to sell,
Unless
you had to do.
yes.
Unless you're considering selling. Yeah.
Yeah.
What would be the like a penalty, an average penalty on that, like $10,000 or?
Based on 450,000? Yeah, I would say on average 10,000, but I do remember that when we were last in this scenario in COVID times, when these penalties started going up so much and everybody wanted to get out of their fixed rate mortgages and get into a variable rate, the penalties were, $20,000, $30,000.
Mm-hmm.
So, and the banks do that very quietly.
Right.
So I'm just thinking like $1,300 over 5 years is not that much money.
No.
I think that people, I mean, it's hard to predict the future and we don't know, you know, there could be a massive drop in interest rates and then you're better off going with variable. It could be the interest rates don't go down as much as we were thinking and you're hedging, you know, by going fixed, you're better off, even better off. I know a lot of people just for comfort choose the fixed term, the fixed interest rate because it gives them comfort. What do you find with that? And is that kind of something people are going to be considering at this time?
Especially
given that they're so close,
right? Like it's been an interesting time because the second piece to this is that like variable rates right now are again just over 1% higher than what you can get for a fix, and that's not the norm. Normally, you're supposed to be paying a higher rate to have that fixed rate to give you the peace of mind for that term, right? Like it's supposed to be that you're taking a higher risk with going with the variable rate, right? And so you're getting it's that risk versus reward piece for sure. So I feel like, and in reading between the lines of what we're being told by our, you know, the people in the know and our chief economist, Dr. Sherry Cooper, that the Bank of Canada is needing to get the variable rate back in line. And fixed rates are really not going to be changing much. Fixed rates are not expected to drop significantly. It's the variable rates that are going to come down.
Because fixed rates are tied to bond yields.
Yes.
Okay.
So it's always interesting. It's an interesting conversation because if clients really want to get that lowest rate, I like to kind of argue back, well, then you really should be going with the variable then. If you want to bank on rates going down as much as possible, go with the variable rate. If you want to get out of your, you know, I mean, it's historically the better way to go, but we definitely have some hesitation after what's happened over the last few years.
Yeah. Nobody wants to get burned.
Yeah.
Yeah.
But they want the lowest rate. Yeah. Oh, sorry, go ahead.
Well, I know that there are people who balance that. They want the lowest rate, but they also know they do want to hedge against the chance that something does go up. So the fixed rate is just a comfort piece for them if they can afford it and they know that the financials make sense otherwise. And their income is also fairly fixed as well. Then the safe bet is the fixed rate because you know what you're getting for the next 5 years. It's easy. But if you are,
it just depends on where you are in your family. Like if you're, your kids are teenagers and they're going to be graduating, there's going to be, sorry, I'm getting text messaging. When your kids are teenagers and life is changing, or they're growing up and they need more space or whatever, like these are the things people don't think about. And then the other thing is like, what's your job situation going to be? So it just costs a lot of money to be in a fixed rate. That's the only thing.
Yeah.
People are looking at like the rate. They need to look at the whole picture.
Yeah. That's exactly.
And how often people change their mortgage over time, whether they see that the interest rates go down far enough that it's worth breaking their fixed rate, but then they would have been in a way better position if they just started with a variable rate in the beginning, because now you were paying higher interest than with your fixed rate than the interest rates on variable, plus you're breaking your mortgage and starting a new mortgage at and paying that penalty. So a lot of people, but I reiterate for us, if you remember the stats for how many people actually within the 5-year term of their mortgage actually change that up.
3.8 years is the average that people get out of their mortgage. And I see it's so consistent.
Yeah. And we see it so consistently that people are saying, I'm buying this home. It's my forever home. I'm never going to move.
I did that
and then,
like 4 times.
Yeah.
Right.
Yeah. You have 4 forever homes out there.
Yeah. Yeah.
Yeah. Same. Not 4 times, but yes.
Yeah. And I'm probably going to do it again.
I'm an anomaly. We've been here 12 years.
Good for you. Well, the average has to have people on both sides of it. So
yeah.
The best time. Oh, sorry, Jane.
We did move around a lot before we came here. Yeah.
One thing that people need to consider when their mortgage is up for renewal, it is the best time to make any changes. So it's not going to cost you any money when your mortgage is up for renewal. If you want to throw down lump sum payments down on your mortgage, you can do that. You can, do renovations. You can consolidate your line of credit. If you've got a line of credit balance, you can consolidate that into your mortgage, pay off debts, that kind of thing. It's the best time to do it when your mortgage is up for renewal, as there's no penalty.
Right.
Okay.
Yeah.
So those are all questions that I'm asking my clients when, their mortgages are up for renewal, to see what the best option is. And if they have potential life event changes, kids growing up, they might want to move, that kind of thing, in determining which is the better option. And then going through that calculator, if it's a real hard, discussion, if they want to don't know if they want to go fixed or variable, we can, plug in based on the current outlook, where rates are expected to go. If that happens, what's the better option, fixed or variable?
There you go.
Can you do fixed 3 years?
Yep. Lots of people are going with a 3 or a 4-year fixed. Those rates are quite favorable right now. I mean, you're paying a bit of a premium for the 3-year. So if you can get a 5-year at 4.89, 3 years, about just over 5, and a 4-year, we're seeing 4.94.
Okay. And
well, if you're going to play the odds and the average, go for the 4-year.
Yes.
You're right. Yeah.
Yeah.
If you're a completely average person, go for it.
Yeah. That 3.8, that's perfect.
Yeah. Yeah.
Okay.
We have a mortgage broker who does talk at our sales meetings, and they were referring to the fact that a lot of people I guess are coming up for renewal and are getting offered just the standard rate from their bank, and that renewal rate is not favorable. And they might think they're stuck because of whatever they qualified for in the past. But they may now be in a situation where things have changed and they may be actually qualifying for a insurable mortgage or
Yes.
something different. Do you want to comment on that yourself? And
Yes. Yeah, so it gets complicated. There's all these different buckets that mortgages fall in. And so there's, if it was uninsurable originally, so if the clients had a 30-year amortization, that's deemed to be uninsurable. But when their mortgage is up for renewal, now they're at 25 years. So they now fall into this other bucket called insurable. Their current lender is going to give them rates based on that uninsurable bucket, which are much higher than the insurable bucket. So it just a quick call to your mortgage broker, that, there's no cost for the service, and you can potentially get yourself a much better rate.
Right. There you go. Awesome. But you'd be paying CMHC fees if you go into the other bucket, right?
No, there's no cost. No, and there's no cost to transfer your mortgage from one bank to another.
Okay.
What do you mean?
So basically, the other bank takes all the new bank is happy to take on those costs in taking on your new mortgage. They'll pay those costs.
Okay.
Wow.
Just like some banks will pay for an appraisal, let's say, or whatever. They're happy you get the business, so they're going to incorporate that in as part of their business model.
Yeah.
Okay. Got it.
Well,
thank you.
We're going to be talking to you at the end of the year.
Sounds good.
Alrighty. All right. Let's get back to the show. Andrew, anything that you have coming up or need? One or two things?
We've got I don't think anything's signed yet. We've got to be careful what we say about new listings. Nothing coming up. New listings. Buyers, definitely got buyers. Broken record again, still need a home, Oak Bay, 3 bedrooms, nice connection to the backyard, under 2 million. Looking for a condo, newer construction preferably, or has some steel and concrete, or just really, really well maintained. 600,000 to 800,000. 1 or 2 bedrooms, anywhere from here to the West Shore. But it's we'd look at what's coming up. Looking for a house or half duplex or possibly townhouse, somewhere between, townhouse-ish kind of thing, 700-ish. House up to maybe 8, house with suite up to about 875. And lots of other buyers for lots of other configurations, but I won't get into weeds on that.
House with suite at 875 is hard.
Yeah, there was one on Joffrey we wrote on and competed and did not get, but that was fairly decent actually. There are some out there, and especially if you go to the West Shore, and of course if they're not in the best of shape. But it is hard. That's a very competitive price point. If you can
we just listed a house with a suite on Standard, and what? You saw it?
I saw it. Yeah, I didn't go through it. I saw the listing, and we talked about it.
Yeah, before. We got 3 offers last night, so I guess the market is fast if depending on.
It's priced right. Your realtor's doing a good job.
It was priced right. I knew that. Yeah, I saw that one coming. I was like, yeah, that's a good price.
Anyway, so what else do we have coming up? We have a couple of listings coming on next week, so I can't talk about them yet. Anyway, I'm always looking for a property out in Metchosin for a client of mine. And I have a great listing on Bear Mountain on Spirit Ridge, if anybody's interested. It is absolutely gorgeous. And that's in the high millions, just under 2. So down the street from a place where I sold a few years ago. Anyway, okay, you guys. Any questions? Anything you want to add? No?
Nothing real estate related.
Okay.
How's everybody's pets? I see your cat, Andrew, hanging out.
Yeah, Sid's fine. I don't know where he is now because he usually spends a little more time. Looks like the door got closed. We've got a cleaner here right now. So he's been locked out, thankfully. He's good.
My dog's got a sore tummy. I can hear it. Anyway,
Oh.
okay, you guys, our show is every Thursday morning at 9:30, with the exception of last week. If you have any questions or comments, we'd love to hear from you. Andrew, how do people get in touch with you?
Email me info@andrewplank.com. Call me at 250-360-6106. My website, andrewplank.com, has loads of resources available to you, and I'm on Instagram under Plank Andrew.
Okay, Jen, how do people get in touch with you?
Yeah, my number 250-217-4925, and email j.lowe@dominionlending.ca, and my website is jenlowe.ca.
All right. And if people want to reach me, I'm Jane Johnston with the Briar Hill Group at Remax Camosun. My number is 250-744-0775. My email is briarhillgroup@gmail.com. You can visit our website at briarhillgroup.com. Oh, I forgot to mention we have a new member of our team, Sean Provencher. If you want to look at these shows and more, go to victoriarealestateshow.com. And don't forget to follow me on Instagram at realtyteacher_remax_Victoria or Briar Hill Group. All right, you guys. So we'll see you, everybody, next Thursday at 9:30. Take care and have a great week.
Guys.
Thanks,
Okay.
Everybody, thanks for watching, folks.
Bye.
Bye.